Michael Baker, D.A. Davidson, senior research analyst, joins us now. It's sort of a random smattering of retailers there. Michael, what do you like about? Is it they're executing well, or are those themes working well with the consumer?
Well, the call is that this is the holiday play for the rest of the year, the next 5 weeks. What we found, and we show it in our reports, both on Black Friday and this morning, is that we were talking earlier about where we're seeing a lot of crowds and all that. That's one thing. We're talking about which stocks perform this time of the year. And what we found is actually, maybe counterintuitively, the less a retailer makes this time of year, the better the stock historically does. Names like Lowe's, O'Reilly, BJ's, all their risk is either in the spring or the summer, and it's already behind them. So they don't make they make a relatively small part of their annual profits this time of year, and historically, then those stocks tend to do better. In fact, Lowe's has outperformed the market from Black Friday to year end in 10 of the last 13 years, and by a couple hundred basis points. So. Again, not exciting, not really a holiday play in the sense of that's where consumers are shopping, but those are the stocks that work this time of year. On the other hand, Best Buy, Dick's, they have a lot of exposure. They don't tend to work as well this time of the year.
I'm curious about them. I mean, do you guys still do like the store visits and the mall check-ins and all that? Is it still valuable? Is there really anything you can concretely point to that you're seeing that translates into an understanding of what's really going on at these places?
It's a fair question. And yes, I'm an old school retail analyst, been doing this for 20 plus years. Sure, we still do the store visits. I have my team out. We're checking with each other. We're picking up anecdotal evidence. I will admit nothing more than anecdotal evidence, but after doing it for a lot of years, you do get a feel as to what's going on. I would say most importantly is where you get a sense of is inventories. And again, that is anecdotal, but I can tell you in our visits this year, we just didn't see, we saw inventory seemed well controlled, and we show that in a note this morning as well, which we quantify. But there's plenty of inventory in the stores, but it doesn't seem overly stuffed this year as we saw in the last couple of years. We saw some promotional activity, but really nothing to us that seemed out of bounds at this point. So there's some value, sure, to being. So I feel like as a retail analyst, I got to be out there this weekend.
What about this, just the big gap we're seeing in terms of spending categories? I mean, you like Lowe's, but home improvement and do-it-yourself has been a really weak spot for consumer spending. We just got another disappointing new home sales number. It feels like even though overall sales are holding up, there is a pretty wide discrepancy as far as where consumers are spending that.
Sure, absolutely. Anything home-related, the sales are much weaker, for sure. Sporting goods has actually held up really well. Again, what I was referring to in Lowe's, it is a buy-rated name, but I was referring to the stocks that outperform from Black Friday through year-end. But, home is just weak right now, and we think will continue to be. Beauty is a very strong category. Again, sporting goods, Dick's surprised to the upside when they reported last week. So, consumers are choosing where they spend, and at this point, home is still not it.
Yeah, we're going to talk to the CEO of StockX next hour, find out a little bit more about the sneaker business right now. Michael, thank you very much for some of those.